Welcome to Pastox Research. We are a research house that provides quantitative research to self-directed traders and investors on the JSE to allow them to market time the JSE to avoid bear markets and recessions and signal best times to be purchasing shares that offer the best trading or investing opportunities. All the services are provided through automated quantitative online models, which we will be demonstrating as a brief overview in this video. So here is the first page, which is your login page. You merely enter in your username and password and are then presented with the home page. Sometimes there will be special messages that pop up, which will be shown as an overlay, which you can just dismiss. And there are some brief instructions on how to use the system, but we are going to dive straight into it in terms of this instructional video. So very briefly, we are going to cover 5 main elements here, which are the charts, JSW Online, which is a system we use to find and provide the best times for purchasing individual shares for trading or investment purposes, Ultra, which is our market timing system for aggressive traders, as well as resources, downloads, and our community forum system, which is Power Chat. Let's dive straight into the first port of call, which is the charts menu. So here we have the charts menu. We normally have a tip of the day. We've taken from a list of 200 of our most favorite quotes and quips, which is provided at the top. And we have the latest SA business news that scrolls along the top. Now, generally, you're not really interested in examination mode with these top lines here. So you will always see a little symbol like this, which maximizes the chart display. So if we click on that, then it basically gets rid of all the stuff on the top and leaves us with our information. So this is normally your first port of call, which is the dashboard. This short video won't allow time for us to go into the full details behind every one of these charts. But what you can do is go click on this video tutorial icon and it will give you a 30-minute tutorial on exactly how this dashboard works. There is also in every chart a instructions button highlighted here that you can click on, and that just provides you with more details as to exactly what it is you're looking at. So the main thing to look at here is the macro level environment conditions, because it doesn't matter if you're a trader or investor, you need to know if we're going into a bear market and or a recession, because it really impacts both those people's lives in terms of what they do. You know, if you're an investor, you're probably going to hedge or go into cash if you see a recession looming, or if you're a trader, you'll switch from net long to net short if you see that there's a bear market arriving. So very briefly, these are the 6 things we track that have got multi-decade long-term records in determining whether we are heading into a bear market or recession. Very briefly, they are the interest rates environment, the actual market momentum itself, the state of the economy, bond spreads, foreign inflows, and of course market valuations. And these are all combined together into a gauge which gives us a health index, which if it falls below 0, we're into a bear market or a weak market, and if it raises high above 0, means we're in a very strong market. And this is a diffusion which just tracks how many of these 6 models are flagging a bull market. So currently we have 4 of the 6 models flagging a bull market. So how most people use that is below 2, they stay in cash, and then they go 25% in the market, another 25% in the market, another 25% in the market, and finally all 100% in the market. So that's briefly how this macro level chart works here. It's an at a glance view of what's happening on the market. And on the right, we have more short-term technical environment conditions. So these are these robots showing us the status of our main seasonal timing models. So we have built a seasonal timing model that provides the most favorable months to be in and out of the market. It's quite a sophisticated algorithm. One is called STM, Seasonal Timing Model Monthly. That's showing us we are now currently long because it's a green light showing. If it's in orange, it means we're in cash, and if it's red, it means we are short the market. So currently we are long. There's STW, which is a weekly seasonal timing model that looks at the most favorable weeks to be in the market or not, and that you can see is in cash. And then you can see STM dollar, which is seasonal timing model dollar. That's basically the rand dollar. If you like trading the rand dollar, that shows you whether we are in a favorable or a bearish period for the rand dollar. So obviously if it's green, it's hinting that we are long the dollar. If it's red, it means we are short the dollar or long the rand. This is the selling pressure diffusion index, and it's used by a lot of our traders to determine whether we're entering into a correction. And not only that, it actually gives us what size of correction we're in, because the size of the correction we're in is related to market selling intensity, not necessarily how far we've fallen. And then of course it also gives you buy on the dip signals. And how this model works is, as long as the selling pressure is below this red line, it's saying stay long in the market. The minute the selling pressure rises above the red line, that's our warning to go into cash, or warning that there's a correction coming. We may want to hedge our positions, or maybe even go short if we're brave enough. And then the selling pressure index will spike, and the higher up it spikes, you'll see we'll start going into a category 1, category 2, category 3, category 4, or category 5, which is a major correction. We haven't had a category 5 for 6 years now. There's a storm gauge here. We normally use the North Atlantic storm naming conventions to tag large storms or corrections on the JSE as measured by selling pressure. So normally you'll see a name pop up here, Angela or something like that, just so that we can measure corrections. So basically whenever the selling pressure rises above this red line, we basically have a storm on the go and we give it a name. And then what happens is, when the selling pressure falls below this red line, that's our all clear that we can get back in the market. So right now it's telling us, although the JSE has risen quite hard, there's not a lot of selling pressure going on. We're still in a safe environment. These gauges here are some market breadth gauges that just show us the long-term moving averages. As long as they're above this line here, it means we're in bull market territory. If it starts dropping below into the yellow area, it means we're nearing bear market territory. And when it's in a red area, it means we are from a breadth perspective, we are looking at a possible bear market. And we track the same with our bullish percentage index, which we're not going to discuss today, and of course our RSI, which is the relative strength indicator that we track for the JSE's top 40, which you generally want to see above this little blue line here to show that we're in a bull market. And if it's below that, it means we're in a downtrend, a short-term downtrend. So once again, all these indicators are short-term. This little counter here is our DeMarca counter, tool used by more of our sophisticated traders, so I'm not going to cover it here. And these are advanced breadth charts used by our traders. But in terms of beginners, all you need to worry about is the selling pressure index and this short-term liquidity index. This short-term liquidity index is a great index that's been designed to allow you to give you warnings of a market correction. So it uses 5 broad measures of liquidity, ranging from breadth, momentum, to the South African volatility index. And basically when it's above 0, it means we are in a net positive liquidity situation. The market should be rising. When it falls below 0, it means we're in a liquidity outflow situation. The market is vulnerable. So typically when this falls below 0, that's our warning that the market's going to correct. So look at this beautiful warning we were given here. Almost a week before the market corrected, we were given a warning that there was trouble ahead. And then of course when it rises up above 0, it means that we can get back into the market again. So right now it's showing us liquidity is positive, nothing too much to be worried about. This indicator here I'm not going to cover, it's for more advanced traders. So really, if you're a beginner, the things to watch here are obviously these robots or traffic lights if you're following any one of our seasonal models, the selling pressure index and the short-term liquidity index. Those are probably the most important short-term gauges you should be looking at. Down here is more for investors. We just show the current PE ratio, which is 19,5. This is the multi-decade average, which is 15. So it's showing us we are very overvalued at the moment. And in fact, we have a quantitative model, which we won't go into detail here, but it actually predicts that the 1-year return for the JSE is likely to be of the order of minus 6.4% based on the current PE of 19,5. Every one of these gauges you can click on and they will take you to a detailed chart showing you what's going on with that particular model. So for example, we said the selling pressure index is really something worthwhile following. So we can go click on this, go see what's up with the selling pressure index. And there's our selling pressure index chart, otherwise also known as Trough Finder 4. And you can see here's a more detailed view of that little chart we saw. It's a day-by-day view. You can scroll through the chart day by day, just holding your mouse over each day, and it pops up a little tooltip giving you the readings. And if you want details on how this model works and why it's such a great model, you can click on the info button here, and basically it tells you what is this model. It uses 6 factors to construct a standardized equal-weighted daily composite selling pressure signal for the JSE. Amazing stuff. And there's a beautiful chart here showing you how this thing works. And generally when it rises above this red line, we're in correction, and then we're getting into major corrections. And when it falls below these lines, these are giving buy on the dip signals. So if it falls below this line here, it's called a great trough. It's basically almost 100% confidence that when the line selling pressure falls below this, it's a signal for you to get into the market, either by buying the JSE top 40 or by loading up JSW and having a look at the favorite shares you've been on the hunt for. And that's a very great accuracy. And obviously when we fall below this green line, still very accurate signals, but obviously only 90% confidence now. Some of them, basically out of every 10, one will be wrong. And then again, a medium trough confidence. When we go up below this line here and fall below it, that's a signal to go long. You can see that was a beautiful signal. And of course, if you click on this link here, you can go to a detailed user guide. And while we are talking about user guides, these icons here on the charts, this date here refers to when the data was updated. So that's the 5th of May 1203. So it's actually updating in real time today. If you see this PDF guide icon, it means there is a PDF, a beautifully constructed PDF user guide available for this chart or for this model. That's just a refresh button if you want to refresh this chart. That button we've shown you is how to get rid of all this nonsense at the top if you want to full screen view, which is quite useful for iPads. And then this icon is if there are any alerts available for this, which we will cover later. And then of course we have this little info button. These are available on every single chart. If there's a video available for a chart, you're quite lucky, and there will be a little video icon here as well that you can go and click on. So let's just go ahead and click on this PDF guide and see what pops up. There, the PDF guide loads up. Trough Finder 4 operations guide. We've gone into great depth to explain what it is we're doing here, why it's important, how to use it, what the historical performance has been like. Nice graphics and charts. We actually cover all the individual components that make up Trough Finder 4 here to show you how they've behaved in the past and how accurate the model is at determining or warning of corrections, number one. And number two, giving you advice of when is the best time to be getting back into the market when we are actually in a correction. So you can go and look at that user guide, and actually gives you a legend here to show you how to read the various components of the chart. There's up to 13 different components you can read in these charts. Basically, this little green light here is saying it's like giving you the green go ahead. But this thing, as liquidity starts draining, this thing will go orange and then it will go red. And basically, we've said there are multiple components that make up the short-term liquidity index. This is the composite of all those components together. So although we might be positive from the composite perspective, some of the components that make this up may have already dipped below zero. And depending on how many of those components of the short-term liquidity index have dropped below zero, this green light will start showing orange or red. So let's click on the short-term liquidity chart. There's our short-term liquidity chart. We can see information on a day-by-day basis. And here you can see all the individual components that we used. So the big black line here is the one you saw on the dashboard, but it is made up or composed of 6 other components, which is the South African Volatility Index and some breadth indexes and some moving average composites. And you can actually see none of them are below zero now, but some of them are heading close to zero. But the minute some of these components dip below zero, that little green light will change to orange, and then depending on if more than half of the components are below zero, it'll show a red. So again, you can see a nice, beautifully constructed PDF guide is available for the liquidity index. And I must say the liquidity index is probably the most used by most of the traders on JSE. It just gives you a general direction of the stock market. So even if you're looking at buying individual shares, it's always important to know what the general direction of the stock market is. So this is why people use this liquidity index. So you can click on this PDF guide, and there we have a lovingly constructed user guide on the liquidity risk index we've devised for the JSE, how it works, what are the formulas we use, what has the performance been in the past. I mean, just look at this puppy. Whenever she dips below zero, nothing good happens on the JSE. And whenever she's above zero, only good things happen to the JSE, which is really what you want to know. So this is quite a sophisticated hedge fund class tool that Powerstock subscribers can use to determine whether we're in trouble in the JSE or not, because most novices on the JSE are buying shares when they shouldn't be and are selling shares when they shouldn't be. And this liquidity indicator will keep you out of most of that trouble. And then what the composite's history is going back through time. So we've got an archive of historic performance going back in time, going back right to before the Great Recession. God, look how it kept us out of that. Beautiful. Just the kind of thing you would want to keep you out of trouble. So that is the short-term liquidity index. Again, if you want to know about it on just a quick brief overview, you click this instructions button. Again, it comes, what is this liquidity index? It's an unequal weighted average of 4 powerful diversified representations of short-term liquidity flows on the JSE. Sounds like a mouthful, but at the end of the day, it's an index, and when it's above naught, JSE is safe. When it's below naught, JSE is not safe, as in this beautiful example here. Wouldn't it have been nice to know a few days or even weeks before the JSE crashed that it was going to crash? Well, that's what this index does for you.